to say all that again, but welcome to the Massive Capital event. And we're here talking about asset management. And so I want to make sure that everybody understands that there's a lot of deals that are struggling right now, and asset management is very important part of being a successful operator. So if we want to go to the next slide. So Massive Capital, will we focus on certain markets? It's very important that when you're focusing on markets that you have somebody who understands the market. And it's even going to be more powerful when you see all of the roles that an asset manager needs to do. So you need to have people in the ground, so on the ground, not in the ground, sorry. So you'll see we're very focused here, Houston, Dallas, San Antonio. A good number of the Massive Capital team are located here, but we have partners up in Denver, North Carolina, and Georgia. And those are ones that give us the power, having the local boots in the ground and the team and the experience. And then we'll be expanding soon to Tampa and Phoenix. So we're very strategic about where we go, because what you want to do is you want to have really good local knowledge and really good boots on the ground in those markets so that you can visit your properties and execute the plan. So we'll go to the next slide. We're going to talk a little bit about the principles of asset management. And then what we're going to do is we're going to have a Q&A afterwards. So on the next slide, Mike, do you want to talk a little bit about our partners? Because you're highly involved in this section. And before I forget, you can also put your contact info in the chat. And if you're new and you would like somebody to reach out, just put new in the chat and I'll make sure that I reach out and connect with you.
Thank you, Trevor. Yeah, so Mike Bailey here with Massive Capital. Great to have everyone join us tonight. Also talk about some things that we got coming up this weekend and next weekend to be sure we connect with y'all. And we talk about partnerships, and one of our key things is accelerating, to accelerate people, let them come up to the next level and partner with them. So we come in, we can help, we provide a balance sheet, we can be the loan guarantor, help with earnest money on a deal with you. We can support with equity. We're not in the game to just bring equity to a deal, but if we're a big part of the deal and you want to partner with us and it makes sense for both of us, and we do a lot of the other buckets as well, then we also bring equity and we do asset management. And the key thing is that what we do is we look for where the gaps are in our, if we're partnering with somebody, and what do we feel and what does the partner feel, and what, just to be sure of what is needed. So we can pretty much take care of everything and fill in the gaps that may be on the other side for you. We also enable partners. We've created over, we had over 20 people that have become general partners just last year, working with us on either their own deals that we've helped accelerate with them, or they've come into our deals and we've accelerated together. So those are opportunities, bringing a deal or, working on a deal with us and being an equity partner. Thank you.
You can do a little bit on the current activity too. So.
Sure, thanks, Trevor. Yeah, so we do have a few deals going on. Some we can talk about openly, some not here. But I think the key to this slide is that we have a lot of deal flow. So we have deals under contract. We have a number of LOIs out and pending in different places, as well as Houston, Dallas. This slide just basically would be updated, on a weekly basis. If you look at the part on the right, everybody talks about these little eye charts, but basically that is all the deals that we continue to underwrite on a weekly basis. I think we ran through this week alone, or even just the beginning of this week, I think we've gone through about another 8 to 10 deals. So it just gives you an idea of how much, we're going through the process of looking at opportunities and deals continuously. So, it's like everybody knows and hears, you got to look at a lot in order to get the ones that really make sense. So that's really the story there. We will be launching a fund in the next month, and so stay tuned for that. We continue to have investment opportunities. We'll drop in the chat the link to our investor portal as well. And we are soon rolling out with some partnerships. And Senate Escalade will be working with us on this. We'll be rolling out our massive capital mentorship program. It'll have a few different levels, opportunities for people to be part of a team and to get in boots on, not boots on the ground, but also boots on the ground, but work in what we call more of a lab environment in our ongoing processes and operations and daily meetings, depending on what level you want to join us at. So that'll be coming out very soon. Trevor, back to you on a deal. Actually, let's talk about this one. I think we have a slot or two.
We do.
And Trevor, before we go into the deals, just a disclaimer. We're not financial advisors, tax or legal advisors. Do your own due diligence. These are deals. We know whatever we know for the deal, and we are completely open and transparent on the deals. But consult the appropriately licensed professionals for tax, legal, or financial advice. Trevor.
Excellent. Yeah. So this is a really exciting deal. This is a 506C, which means we can talk about it here. It's open to anyone who is an accredited investor. And this is a land entitlement deal. So the difference between a development and entitlement, this is buying the piece of property and getting it entitled to be able to use it for its next use. Its next use will be a townhome development, but we had a slot open up and we're closing really quickly. We'll be able to close on the deal, but we'd like to make sure that we offer it. So if you would like, you can reach out to Jasmine or myself. We're accepting all types of funds for this deal. But the interesting thing about this deal is it's about a 2-year turnaround. So rarely do you get short-term use to be able to use for your money. And this is one of the ones. So it's 20% internal rate of return, about 1.45x on your money. There is a 7% pref so that the investors get paid a minimum of 7% first of the proceeds before the general partner gets paid. And this one is on a 70-30 split. So this is unique. Unfortunately, somebody couldn't move their money into a self-directed IRA quick enough to be able to get in the deal. So this is a deal that we hope that you can get on board. If you're an accredited investor, be sure to connect with myself or Jasmine. Or if you know anyone else in the massive team, but we're the ones doing it. Now, we do have a couple of deals, and those ones are 506B deals. So what that means is you have to have a substantive relationship with us. So if you know someone on the massive team, I know a lot of people know many of us, you can reach out to us and ask about these deals. They're both really good deals. One's launched this week. We're going to be launching another one next week. And our goal is to try to have a mixture of 506B and 506D so that we can satisfy the needs of our investors. But both of these are really good value add multifamily properties. So please reach out to whoever you know on the massive team.
Thank you, Trevor, Mike. And then the topic for the day, real estate asset management. So as you know, Sanjay Agarwal, one of the partners for Massive Capital, within asset management, we're going to talk a little bit about what is actual asset management. How does the legal structure for asset managers work? The framework and the components of the asset management within the multifamily space, and then some expectations and other stuff for this. So let's get into it. So So what is asset management? So I thought, let me look it up. Wikipedia definition is asset management is a systematic approach to the governance and realization of blah, blah, blah. Institute of Asset Management definition is it's the art and science of making the right decisions in optimizing the delivery of value. Some other website, I looked it up. What is the definition and, process of planning and controlling the acquisition, operation, maintenance, renewal, and disposal of assets. While all these are right in their own place, they are correct, but that language makes my head hurt. What is asset management, right? But to me, and these simple, straight words, asset management is make the damn investment profitable. I say that this is a very powerful line. It does not mean that you do one thing or you do the other thing, or you don't have time for one or the other thing. You got to make time to make your investment profitable. You've got to have your eyes and ears on everything. So, and really, this is the ultimate, to me, the asset management is. Just make sure whatever the asset, whatever the investment the asset manager is responsible for, it should be profitable. It's not always profitable. There are some uncontrolled risk factors. We discussed on our webinar last week. There are market risk, systematic risk, and other things, but that's the goal, to make it profitable. So in the multifamily space, since we talk mainly about the multifamily, how does the structure work, right? So there is always a property LLC, or at least the way we do the deals. There is a property LLC. We also call the holding company. Holding company is a single purpose entity newly created to hold that asset. Passive investors and the sponsors hold the shares of this entity, right? So this LLC holds the deed or the title to the real estate that everybody comes together for. And the limited partners own, whatever the split is on that deal. Typically, we put them as a Class A shares. Limited partners or passive investors, that name is kind of used interchangeably, and they get the portion of that LLC. And then typically the way we do it is there's a management LLC, which owns a percentage of this LLC, which is also called the sponsors and the general partners. We typically classify those as Class B shares. And this management LLC is technically the manager. So the legal term is the manager for this entity, but they are the asset manager for delivering the business plan, delivering the profitability. So the management LLC, the purpose is to manage this asset and entity. Asset manager is the asset is responsible for delivering the business plan. Right, whatever business plan we prepare together. But as a manager, usually there is one GP or a sponsor as a primary lead, and then the other GPs and sponsors are assigned duties. They participate and they contribute to the operation, to the delivery of those profitable. But it's the responsibility of the asset manager to call upon whoever the right skill set is for delivering whichever piece needs to be delivered. So just a legal structure at a high level, that's there. So from a framework and component perspective, asset management sits in the middle. We always say there are 4 components. There's a physical property, you have your financials, you have to decide your strategy, and the manage and deliver all of these 3 components through your personnel, right? So let's talk about each of these pieces one by one. So on a physical property perspective, as an asset manager, you got to make sure the property is desirable. and it has a curb appeal. Now, again, the desirability and curb appeal can be different for the area, for the market, for the size. Is it Dallas, Houston downtown versus suburb versus secondary, tertiary market? What does it take to make a property desirable and curb appeal? Very different for different markets and different locations. But that's a key component to make sure it's desirable. The repair and maintenance, you got to keep up the property, upkeep, the unit turns, construction, capital projects. Most of the projects that we undertake, we do either it's a new construction or there are capital projects, the value add on the older properties, right? Now, all of these are supported by the financials. So the key role of the financials, the budgeting, you have to track the revenue, expense tracking, give a target, right? What is the target for revenue? What is the target for expenses? What are the expenses we are allowed, the property management is allowed to spend and go through it. Cash flow, as what initially Trevor was mentioning, a lot of deals that had a short-term or a variable interest rate loans have a cash flow issue, right? You got to look at the optimize your cash flow. You got to keep a line of sight to having enough cash to pay your bills, and your mortgage, your lender being one of the biggest bill to pay. From a financial perspective, lender, there's a constant communication and relationship. Lender usually require the monthly reports, what's happening. The DSCR is within the range that the lender like to see. One of the deal I heard recently, the interest rate went up, the lender called for a rate cap to be put in place towards the end of last year, and that meant that the project needed $1 million additional to buy that rate cap, and that was a required from the lender, right? I mean, there's nothing they could do, and they had to do it. So managing the relationship and communication to make sure all the things are satisfied are important. And of course, from a financial perspective, the investor communication and relationship, one of the key important part of it. And in most cases, the investors are the limited partner, the passive investor that we were talking about on the previous slide, but there could be a preferred equity partner investor that's there, different classes of investors that could be there, and constant communication to that for the financials, what's happening at the property, where it's headed, and is the investment still on track for the business plan. From a personnel perspective, so asset management doesn't usually have a direct reporting for the personnel. Maybe an admin or something could be there, but other than that, most of these are relationship and a dotted line, as we say. So property management company, it's a key relationship, but your property manager, your maintenance guys, your leasing guys, everybody, all those personnel kind of work through the property management company, but key personnel for the asset manager to deliver on the plan. Accounting, tax, bookkeeping, without this, won't be able to deliver on or even see which way the property is headed, what's going on, and what's happening. Again, property management may do some of the basic accounting and invoices and account receivable and payables, but adding up to a strategic level and aligning to the strategy and seeing that happens at that level. Cost segregation. So the last 4 or 5 years, the cost segregation has been a big component of asset management and the strategy for all the deals. Again, as it gets goes away over the next 4 years, this may disappear. I'm sure there may or may not be another program or something like that comes up, and anything that goes along those tax strategies and providing the appropriate information regarding that, you have to execute. And being from Texas, we are in Texas. tax is a huge portion of it. We see some of the other states where tax is not as big of a deal, and but there are a lot of states that tax is a huge deal. So protesting that tax on a cash flow optimization is a huge part of that. That you have to hire somebody and work with your city personnel and deliver that. Insurance, as you know, we're seeing insurance is skyrocketing, is multiplying. Again, in Texas, insurance tends to be a bigger component of your OpEx, but this you have to work with your insurance broker, the right type of coverage, make sure it's you know, you don't have too much insurance, but you don't have too little insurance. And then there is a whole host of vendors and contractors that asset manager may work through. So, you know, the water saving, solar programs, replacing the roof, and plumbers, and of course, property management plays into some of those roles. But you know, working through them and who's the right person to do your big CapEx project and who's not is a key part of the asset management to make those decisions and drive that. And of course, the strategy, one of the key component of that. So you know, income optimization. So while the financials would look at the tracking and budgeting of the revenue needed or what can be done, is through the strategy, you decide, the asset manager decides, you know, hey, we have a high vacancy, so should I increase the rent or should we keep the rents flat and do short-term leases, right? What can be done on the other income to add more income to the to your P&L units? You know what? At the strategy level, you decide what level of finish to do for the units. Once the level of finish based on the strategy, the market, where the future 1, 2, 3 years of the property looks like, that decision is made at the strategically at the strategy level. And then of course, it's delivered as each unit is turned through the personnel, and then it flows into the revenue from those units. You know, so all of these four kind of work together. Marketing strategy, you know, depending on what type of market you're in, is a key component of deciding on the strategy for the marketing. Again, it gets executed through the property management company, the personnel shows up in the revenue and the financials here. But at a strategic level, how far, how deep we go on the marketing is a key strategy based on the traffic and the market. Policies and procedures. So it's policies and procedures is a blanket term I put in here, but you know, depending on the market and where you are. So you know, if the property is currently sitting at a 95% plus occupancy, you may want to screen tighter and have a higher income threshold for the property management to follow. But that comes from the strategic view where the property is. And these policies and procedures are constantly being turned. You know, when a tenant is up for renewal, what are you going to do? Are you going to background check each and every one of them, or are you going to continue to renew without the background check? Again, it's a strategic decision on the policies and procedures, but it shows up on the other sides from that. CapEx projects are typically a big part of the strategy. You know, if it's a value add, or if it's not a value add, is there some CapEx project that needs to be done from a long-term sustainability, the long-term viability of the project? And based on the plan, the strategy, the business plan is to keep the property for 5 years, 7 years, or sell it in 5 years or 10 years. That CapEx project is a huge, which CapEx project to do could be a part of it. Level of unit terms. At the strategic level decides what level of term to do. Again, from a strategic perspective, decide, do you refinance? Are you planning to sell the property, refinance? And How does that flow into the cash flow optimization? You have a variable interest rate loan, and interest rate goes up. Guess what? You got to refinance quickly. If refinance on not on favorable term, you got to sell. And again, that's your strategy, which way you're going to go, which way you're going to do, and then finance could execute on those things. And then I have a little bucket here of markets. And as you know, we are not isolated. We live in a very connected world. So, something happens in China, something happens in Asia, Africa, Europe, affects us, our real estate, our markets. So, what's happening in the stock market? What is Fed doing? What's happening to the interest rate? What's happening to global manufacturing? What's happening with the inflation, United States? What's happening with the energy sector? So oil pricing and what the Middle East does for oil markets plays a big role in how your property may get impacted, right? From a market perspective, the pricing for the raw material, so copper, aluminum, coal, all of those things affect the property performance and what may happen 1 year, 2 year down the line. So as the asset manager to decide the strategy on the property, and do you continue with whatever the original business plan, or do you need to have a course change? The following on the markets and staying up to date is a key part of it. So, and a lot of the times people think of asset management as, the dealing with the physical property, dealing with the property management and the vendors, some financials, but strategy is a very huge part of asset management, including following and going to the market. So what are some of the tools and strategies for asset management that are available? And I want to leave 20 minutes for quick Q&A, so I'm speeding up a little bit. Most of the asset management strategies, of course, your revenue management through your leasing and occupancy. How do you qualify the tenants, your potential tenants? How do you manage your delinquency? If you got a high delinquency, do you go hard and if you start evicting right away, or do you go with the payment plan? Do you come up with some other financial solutions for the tenants? Huge part of this, part of the strategy for asset managers. Lease management, rent pricing, and then defining the clear KPIs and incentives for the personnel that are involved. Key part of the strategies to deal with there. And of course, from a tool perspective, the property management software, from a physical property to go to the financials and keep on that, property management software is a key. So Rasman, OneSite, Yardi, some of the big name ones have access to that and downloading data and reviewing that, and then doing the analysis through for all the data and various reporting tools to use those. Again, global and local market knowledge, a key component that goes into the asset management. Physical presence, the audits for the property, having a schedule for audits, visits, and what to look for on those, when to say something is good, what something is bad, are kind of the tools for the asset managers to use. And at a high level, the expectations from an asset management, we thought we'll put some of the strategies, some of the stories here, talk through this. I know we have some in our audience that have a good stories to tell here. So the CapEx and the tenant quality, just to kind of drive the property quality at the property, creating from a massive perspective, we always think of what culture we are creating within the community, right? That's a key component to, kind of strategically drive the right tenant base and, that curb appeal that we talked about, keeping a clean, welcoming place for the tenants. So, some of our properties in Pasadena, as soon as we took over, we had an event. We've done some, we got the YMCA involved. They have come on site and provided some training and education at the pool. We offered our pool for the ongoing training for the kids on site. Of course, those type of things are done through vetted and reputable organizations. Of course, there's a lot of bad stuff that gets handled. So as you know, end of the year, November, December, January are always a high delinquency time, and tends, as a result of that, tends to have a high turnover, right? So gotta manage that, right? And then the property on site, the manager, could the managers be stealing right under your nose? And even property management doesn't know. As an asset manager, you have to spot that, you have to catch that, right? So those are the things. We did have a scenario of that did happen, but before it did a bigger damage, we caught it and went after the manager. And there are signs that the asset managers can see. And again, those audits are important to catch those type of things. And of course, if you're dealing with the Class C properties, deep value add, sometimes there are, violence that happens. There is the gangs, the groups, all those things happen. Again, goes into your strategy. If you're going into a location that tends to have a higher crime, then you need to have a security plan or a strategy for security personnel to be there. And you gotta have a process. If there's violence on the property, what do you do, right? And that happens. And 6 years ago, as a new asset manager, when the first happened, I freaked out, but then I learned what to do and where to go and what are the steps to take. So it's not as scary, by the way, as it feels when it happens the first time. It's all manageable, and you gotta look for the signs before it happens. And from an asset manager perspective, something that's been in the news, very current, the bank failures. So is, like I was saying, watching the markets and the news, this is a big part of it. It's we've seen 2 bank failures. We have had really no in the last few years, and then all of a sudden we have 2, and Fed has acted very, very strongly on those, right? One of the biggest thing Fed acted is they assured anybody who has even more than $250,000 in deposits that their funds are safe and secure. Even though FDIC insurance is up to $250,000 deposits, Fed has really said that, hey, your deposits are safe. There will be no default. And from a Fed perspective, they cannot let the banking system fail. Imagine for a week you don't have access to your bank account and money, what havoc that will do. You will not be able to do anything, especially as we in a more and more of a connected society and infrastructure. So these are key things important things to watch and go after. And yes, there are 2 bank failures. I think Fed acted very fast and strong, and they're asking all the banks to beef up if they have the long-term bonds and everything else. So they're starting other things. So just something interesting that as a property asset manager, multifamily asset manager, you got to watch and be involved in. I'll stop there, and we'll start with Q&A. Any other comments or questions?
One of the things that a lot of people don't understand is you look at that, and that's a lot of information, a lot of technicalities. And if you think about it, that a good asset manager is really a strong chief operating officer. They're taking care of all of the moving parts. They're looking backwards, looking forward, looking at what's happening. There was a time where apartment rates, the rent rates were going up quickly. And so being able to adapt and quickly do them. Then when rent rates stop going up, you need to adjust. So it's a very interesting thing. And then, like you say, Mike Tyson said, everybody has a plan till you get punched in the face and something happens. And a good asset manager responds quickly. And I think that's really huge, that even though it's technical, there's so many moving parts. If you're not looking all 360 direction, you're going to miss something, and it's going to impact the investor's returns, right? Because the asset manager's job at the end, as we said at the very beginning, is to make the property as profitable as possible by implementing all these tools. It's very important. So we can probably just go to everybody on the screen and you can unmute yourself and ask questions, or if you don't want to, put them in the chat.
I'll take some of these questions in this here. David, hey David, what are some of the audits or controls for an asset manager to keep property managers honest? Great questions. This is a great question. So, I'm a big proponent of, the markets kind of have all the information built in, right? And that kind of you can kind of extrapolate that the financials for the property kind of show you everything, right? And yes, the financials are a little bit of a backward looking, but so big controls are on your the financials. So you have your budgets, first of all, right? That's your biggest control is your budget. And it not only makes it easier to manage with the property management and set expectations, but your plan, right? And when something comes up, how much deviation from your budget you have. So your budget is your first and foremost control. And then you have your trends and your performance as it relates to the previous months, right? And you should not have, from 1 month to the next month, you should not have more than 10%, 20% deviation on your rental income, right? Again, I'm saying 10%, 20%, it varies a little bit by markets and the type of assets, right? So Class C versus Class A assets, right, would have more variability, but for that asset, you should have that, hey, it should not vary more than this or more than that. And then, of course, you have your controls in terms of per unit, per square foot type of things that you track and monitor, and anything that goes. From an audit perspective, your rent roll audit is one of the biggest audit, right? Because rent roll is where everything is happening, everything comes to reality. So you have, you screen through your rent roll and audit that, verify the units that are vacant on the rent roll are actually vacant, verify the tenants that are marked as delinquent on rent roll are actually delinquent, and somebody's not making something up in between. And I've had property managers who would leave a unit vacant on rent roll, but they would have somebody in the unit and accepting cash, right? So if you never visit a property, if you're never auditing a rent roll, managers taking cash and saying the unit is vacant, that's a big one for asset manager to keep track and catch. It happens. It's very real, especially on Class C properties. And of course, your invoices, the expenses that are being paid, auditing those and approving those beyond certain amount before those are paid or committed. Always a big one in terms of your control and audit. Personnel, your big control, personnel, hiring your right personnel, doing the background on personnel. Same for the tenant, right? That policies and procedure for leasing your units, what background you do, what do you check, is a big control. And auditing those that all the leases that were done in the last month, 2 month, 3 month, were all the background checks done. did the tenants meet the criteria that was set by the property manager? Yeah, and I mean, those are some of the audits and controls, but the list goes on similar to these.
So one of the questions is the property manager reports that you get. I know that you want to look forward at upcoming leases that are coming up for renewal. You know, there's a lot of things. So if you want to talk a little bit about that, because you got to get good reports, right? Garbage in, garbage out.
Yeah. So how do you keep your PMs accountable, and how the PM report to you, right? So property management is just one of the, so to say, personnel that is managed by the asset manager. And depending on the property and location and where the property is in its life cycle, there could be a daily, weekly, monthly, quarterly reviews and meeting of the financials with the property management. So when you take over a new property, it's a Class C, really high value add, maybe need a daily huddle, right? As you stabilize the property, maybe only need a weekly huddle or report out or key metrics. And as you really have the property running smoothly, no big CapEx projects anymore, a monthly update is okay. Beyond that, site visits on a regular basis. Again, if you got a $1 million CapEx projects going, you need to have asset manager need to have somebody on site on a multiple times a week. Property stabilized, is running smoothly. Maybe once a month is good enough. So that's a kind of the you keep the property management accountable. And the report, yeah. So there is a monthly officially reconciled reports, typically that the property management does, and in between on a weekly basis, there are the KPIs that they report on, and if something seems to be going in the wrong direction, then calling, visiting, and addressing those.
So there was a question about asset management fees. And we could probably talk a little bit about the different management fee property companies, depending on the size of your property and the class. Sometimes those fees are different.
Okay, yeah. So typically the asset management, as you know, there are other vendors involved. The visit, the overhead is there for the asset manager on top of their time. So like most of our deals, we have a 2% of the gross rental revenue that is generated on a monthly basis that is charged. So that is charged, it's above the line before the NOI expense item that goes as an expense for the property and allows for the management of this and everything else. I see some of the questions here. What software tools does your asset manager use, and how are they applied? So, some of the tools I mentioned here, like we have for one of our properties, we have Resman. For other property, we have a different software that they use. We download rental financials for that, and we plug into our Power BI tools. Red IQ is a great tool for looking at your lease expiration, when is it coming due, how well you're burning your loss to lease and trends. Really good on that, and some of these tools. So we use some of these tools. There is no one like a comprehensive asset management tool. I think there are a couple that are kind of up and coming in the market, but right now, the property managers, whatever they use for the tenant ledgers and everything else is the key. And then we use a couple other tools on top of that.
And then one of the questions is picking your property management company. And I know we just went through an exercise. I'm fairly connected in the market, and I found 3 names. Passed those names on to Jen. She interviewed them. you and Sanjay spent time interviewing them, and you actually have them write a business plan for you. And it's really just like vetting any other company, right? It's referrals, it's actually working with them, talking with them. Very important is meeting their regional manager, and because that's who's going to make or break your day-to-day, because they're actually the one in the market. And you want to ask them clarifying questions to make sure they understand what the property you're looking at buying can do. I don't know if you want to add anything else, but I know we just went through that exercise, and it's a very important one.
Yeah, so initial selection of picking a property management is a key. And you know, like whenever we put a deal together, we have our budgets and our pro forma, and property manager has to align with it, right? But at the end of the day, asset manager can fire the management company and hire a new one, right? And that's the ultimate responsibility of asset manager. And you know, as asset manager, we've had to transition through management companies. And you know, while there's a gap, while there's in between, you know, you do whatever you need to do. You be at the property to take care of whatever needs to be taken care. Bring the manager and the property management company, you know, separately or together. So there, but absolutely, property management company is one of the biggest piece of this. I see here another question. Super basic, but how does one start in asset management? Underwriting and broker outreach are well publicized, but asset management has always seemed like this task performed by specific third-party groups. So,
Hey, Sanjay.
Yeah.
Sanjay, I think the next question kind of, it's a different person and question, but they kind of go together. Is like, what are kind of the skills you need for asset management? Like, you know, if somebody is a hotel manager, can they manage a multifamily? So they're kind of similar type of questions. Like, where do you start? What are the basic skills? Some of those things, I think.
And there are very few books published on it, but I'm going to put in the chat a book that I recommend from a friend of mine. It's a book by Gary Lipsky and Kyle Mitchell on asset management, because there are very few books written on asset management.
Yeah, no, thank you for that. Yeah, so I think to get started in asset management, I think basic P&L business knowledge is a starter, right? And as you know, we're talking about here asset management for multifamily mainly, right? But asset management is a very generic term, and a lot of people know, stocks and bond are managed by the asset managers. Bank of America and all the big banks have asset managers, and they manage whatever the asset is, which were some of the generic definitions I started with. So we talk here for multifamily specific, but any asset management, I think, starts with the principle, you got to figure out how do you make your investment profitable, right? And the first and foremost for that is your P&L, your revenue and expenses. You got to have a good handle on basic terminologies around those, tracking, analyzing, and looking at those. So that's a generic across any type of asset management. But then when you get specific to a category like multifamily, hotel, stocks, bonds, or whatever, you need to know like a revenue line item, like a certain dollar per square foot rent, right? Is that good or bad, right? That's the asset manager. They have to decide that, can I do better or can I do worse? Versus, going for a stock, you're analyzing a stock and looking at a PE ratio, right, for that. But then determining is that PE ratio is good or bad comes from the experience, right? So other than having the basic knowledge of running a business, P&L and balance sheet, experience working with other experienced asset managers and learning the ropes is a key way to start, in my opinion, and going through that. And you know, I think the in the multifamily space, typically the sponsor, the GP team of one of those will be the asset manager. Hardly ever we see it as a outsourced, as someone mentioned in a comment here, or a third-party group to do the asset management itself. Of course, the vendors are hired as shown here, but other than that, is done that. So, you know, can a hotel asset manager background do a multifamily? I think to some extent, yes, but on a smaller project, yes, but on a bigger project, so, you know, no experience in multifamily, and all of a sudden you're going to a, you know, 400 door multifamily, probably not. Probably there will be some pitfalls and mistakes to learn from, and the better route would be to, you know, partner with somebody experienced and learn the ropes, and then go to the bigger ratios. I think I answered this question. I see asset management fee. What does MC charge, and where did the fee go? So I kind of answered this, but from Massive Capital, typically we bake in a 2% asset management, 2% off the revenue collection, and it's up to every deal. It can be different. There's no standard 2% or 1% or whatever. But it comes out of the operating expenses for that. What else? Let me see. What other questions?
I think we got them all. I've been scrolling along.
One of my investors would like to know how you hold your PMs accountable. Hey, Mike, yes?
No, I was actually trying to talk. I apologize, I was muted, but and I'll let you come back to that one. But I wanted to mention, you know, if there may be other questions that come up, but we have a few people, a few in the audience as well, Bobby and Bruce. You know, some of our partners have been managing assets, and you know, if you guys have anything to share or chime in with, you know, please feel free to jump in. It's part of what I know. It's for Bobby. It's probably been a new and very, you know, something he's been learning and doing, and does a great job at it. And Bruce has been doing it a while. So Bobby, I don't know if you get any lessons learned or things that you want to share as well.
This has been out. So thanks for hosting this. A big shout out to the whole team and community. We are recent partners, local partners for and sponsors for multifamily assets here in growing North Carolina, a super great market, and we partnered up with Massive Capital in the summertime. And you know what? It has been a fantastic ride. I think just in terms of the knowledge that I think I was talking to Sanjay one time about an air conditioner. And he's just like, are you talking about the half-inch pipe or the quarter-inch pipe? And I'm like, wow, man, like the details of knowing that. So it's down to the details, but really that framework has been so useful about the different, you know, managing the different aspects, the physical, the financial, and the different aspects of it. So the framework and tools really accelerate and learn. You know, they say that the smart person learns from their own errors, but the wise person learns from the errors of others. And that's what the partnership with Massive has really been super helpful in terms of the tools and the frameworks. So kudos. Let's take on to more. The one that's on the hook.
Sounds good.
Thanks, Bobby. And then I know as well we have, you know, somebody else on here new into doing asset management on one of our properties with us. Jen, I don't know if you have anything you want to share just for as it's been going on, you know, learning and new things that have come about for you in the process.
Yeah, I mean, first of all, thanks guys for doing this. You know, it's been a journey. It's been a big learning curve. I think, you know, my biggest kind of aha with working with Sanjay is just, you know, how you have your hand in a lot of different things, and you're kind of the glue really that kind of holds the project together. You kind of are the liaison between the project and everybody else. And so, you know, it's been fun so far, and I'm excited for, you know, our up and coming deals, and looking forward to what the future holds.
Yeah, thank you guys. And we couldn't do this for all you know, Bobby, Jen, Bruce, and all of our partners. It's been good, very good. And yeah, sorry, sometimes we drop things last minute, so that's just the way things go. So yeah, what are the questions? Anybody? Any other questions?
If there's while they're waiting, and if some people got some questions, drop them in the chat or raise your hand. Feel free to. I do want to. I'll mention a couple things. I will be coming to Atlanta this Friday for the meetup. That will be in Atlanta. I think it's at 5:30 p.m. up in Buckhead. It's the same as was about a month ago. If you're interested, you know, can drop me a note or drop in, you know, the chat. We'll get you the information, but we'll be over there supporting that. And then the following weekend, the March 24th to 26th, Shariah and I, some others, Jasmine, we'll be partnering up with Legends Equity Group as well. We'll be doing our normal meetup at during the Cardone events. We'll be having a meetup on Friday and Saturday nights at the courtyard. So that'll be going on as normal. If y'all are in town, want to join us, let us know as well. And we can get you in. We got a WhatsApp chat there, and love to see y'all there. So a couple just want to let that out of the bag, I guess, that we're going to be out and about the next couple weeks. I see Brooke has her hand up.
Yeah, so Brooke has a hand up, and she asked the question. I thought I answered the question, how do you hold your property management company accountable? You know, the first and foremost, it starts before the acquisition, right? Your property management company has to be kind of aligned with your pro forma, your business plan, and then that business plan pro forma really sets the budgets. So you set those budgets and kind of let them run. And you know, sometimes in the beginning it's hard to set the budgets because there's too much movements or things are a little bit in a fluid. But you know what are you expecting for a high level collection, high level expenses per month, and you know, you hold them to those, and they have to deliver on those. So that budget is a key. And then of course the traffic flow, the lease up, the delinquency, the rent collection, all those pieces kind of go into that for property management. And you know, they got to deliver on those. If they're not, you communicate to them on a regular basis, and if it's not getting better, you give them an opportunity to deliver. And if they can't, and it could be the market shifted, right? So and that's a two-way conversation with them. And you know, either you come to an agreement and you have to change your budgets and strategy, or you know, they can't deliver. So yeah. They're asking, are you doing weekly calls? How are you keeping them in line? So yeah, so that depends on the property, the type of property, location, and where it is in the life cycle. So for example, on the Pasadena property, we were doing almost daily call. Then we switched to kind of every twice a week. And then I was doing a weekly for a while, but we're getting close to stabilization there. So now it's more of every other week and then a monthly. I know our mixed use in Fate, Texas, that property, it's a smaller property, class A. We barely do a monthly call even. Financials come out, everything looks in line, property is going the right direction we expected. We may get on a monthly call or we get too busy. We don't even do that sometimes because it just runs so smoothly. So it kind of depends on whatever is needed for that property, where it's at the life cycle. And again, I always go back to this, if I got to do a daily call to make it profitable, I'm doing a daily call. But if I don't have to do a monthly call even, and it's still profitable, I'm not doing a monthly call. Goes back to that. Hope that answers, Brooke. I know we're past 7 o'clock, so feel free to drop off, guys, or we'll hang around. Any other questions?
Just to make sure everybody knows, every Wednesday we do some sort of educational format. So please invite your friends. We try really hard to add good value. We try really hard to be open and give the best answers we can and try to educate people. It's really important. And if you sign up and you can't make it, we will send you the recording. So it doesn't mean if you can't make it, the learning stops. But I know next week we're going to talk about, because we got a couple of oil guys in the team, how that they've been using their retirement money after they've retired from the company to invest in commercial real estate. So that's going to be a very interesting one as well.
Looks like there's one more question here. How is asset management different between direct and partner-owned properties for MC? David, do you want to elaborate? Do you mean like if I own a property personally versus that I have investors?
Yeah, well, I mean, for example, you got the properties where Bobby is involved, and you've got boots on the ground there, and you've got people at massive capital. I mean, obviously, I think there's you're sort of overseeing the people that are overseeing the property managers, I think, maybe as opposed to if that kind of layer wasn't there.
Yeah, okay, I see. So you're asking how does the asset management differs for OBO versus OBM? So OBO, yes. We talked operated by others, OBM operated by massive. And I think that's what you're asking. Yeah.
Yes, exactly.
So,
yes.
Yeah. So, for a property asset management, the key principal activities that need to happen are still the same, right? So like Pasadena property we own, we manage. So, I'm kind of involved in doing all those things day to day. For the Water's Edge, Bobby is doing that. But we talk as often we need to. But Bobby has the day-to-day communication with property management, visiting, checking. And Bobby is the key point person, right? So in this framework that we said, there's a primary person here as the asset manager. Bobby is that for OBO. I'm the one for Pasadena, right? So that's kind of the difference. And then Bobby may call on us or somebody else or John or whoever for these. And then some of the metrics that we are starting to track, and Water's Edge, we've owned it for less than 6 months still. So the metrics we're starting to track as the property matures, it'll be the same across all the properties. So.
Thank you.
Yeah, okay. What are the questions? Any other questions?
And I know there's definitely learning on everyone's side, right? Everyone has a different way to do things, and it's creating the synergy of a partnership. Where people have strengths, let them go off and lead, and where they have needs, support them and help them grow to be able to do it. It's none of these are one man or woman teams. It is a community effort in combination with the local property management company in the end to get the best result for the investors.
Yeah, and I mean, asset manager doesn't necessarily have to do this all on their own, right? It's really pulling it all together to this, right? Like, hey, call on your CPA to do this, call on your bookkeeper to give you analysis, or you know, calling on your property management to do the things, but setting the stage, setting the strategy, and then making sure the results are what they are, and hiring the right people, and you know, property has the right result, is asset manager's responsibility. So it's a lot of fun, it's a lot of headache, it's a lot of things.
Once you think you know it all, or you have control of it all, you find out you don't.
and you know, the biggest wrench is the markets constantly throwing a wrench on. Once you think you know, you stabilize, and then something happens, local market or global market, that you gotta, you know, look at things a little differently.
So Jasmine, Trevor, you want to share your information again?
Yep.
Some people are looking like, how do they get onto our weekly calls? How do they keep connected and so forth? Connect, user, you know, the Calendly link or something, connect
Yeah,
with
so
Trevor, connect
my
with Jasmine.
link tree has all of my contact information. It has the link to sign up for the Massive Capital webinars. It has the link. We haven't even talked about it tonight, but the Girls Society has the link for you to join. They're doing some amazing things. I highly recommend that you share that with all of them. It's very important. So we have a lot of activities.
Nice.
Yep. And,
Good. Share the book, Trevor. Somebody requested the book that you mentioned earlier.
Yep. Okay, I'll stick it in again.
Yeah. Okay. Otherwise, if no other questions, we will.
So we'll close the meeting, and if you got some other questions you didn't feel like asking in front of the crowd, feel free to ask. And thanks for everybody coming out tonight.
Yeah, thank you for joining. Yeah, and feel free to reach out anytime.
Hope to see you in Atlanta or Miami. Go ahead, Sanjay, sorry.
Yeah, no, I'm just saying, please reach out if you have questions outside of this. Always love connecting one-on-one. Anything we can do to help and connect, love to do that. Thank you, everybody. We'll drop off and close the call.
Thanks, everybody.
Thank you.
Reach out if you'd like to connect.
Hey, Lev, so you're coming down, you said? You're coming down to Miami?
Yeah, I'll be in Miami next week.
Okay, good.
Looking forward to it, hopefully. We got some snow coming down right now, as long as I don't get snowed out up here in North Dakota again. So
Gotcha. Yeah. I was looking to see if did Nick, are you still here? Or did you take off? Nick Wilson? I don't see you now.
I think they're gone.
Okay. All right. Hey Roberto, glad to see you here tonight.
Representing legends. I was on their call Monday.
We'll see, Roberto, we'll see you next week as well.
Yeah, I'll be there.
Okay. Good.
I got a little bit of further ride. I moved up there from Fort Lauderdale. Would have been easy, but now I'm in Tampa.
Right. Okay. Nice.
Looking at the things up here.
Okay.
Yeah, I got some things I want to discuss with you guys when we get a minute. I talked to Alex. I'm gonna send you something. We want to get together and just talk between us a little bit.
All right.
So we'll talk about it.
Okay. Yeah, and Shariah and I, like I said, will be in Miami. So one-on-one, we just get out of the meeting and go sit down somewhere for a while.
That would be awesome. We'll catch you there.
Okay. Miss Natasha hanging out to the end again.
Yes, I'm always here for the after party.
Sanjay left early. He doesn't know about the after party.
He's not, yeah, he's not an after party guy.
He's not. I definitely like
He's
the
got
after
young
party.
kids too. He helps put his kids to bed.
Are you cooking tonight, Natasha?
No, I'm not cooking tonight. Fortunately, I already picked up food earlier.
Okay, all right. So you have anything going on with you that you care to share or talk about?
As far as recently, just been looking at deals and kind of trying to understand what's the best deal and watching the crazy banks crash, and just still knowing that regardless,
Yeah.
land is a commodity, no matter what, the land will still be okay. And if as long as you buy correctly and do your numbers correctly, it's not as bad as it sounds. And it's definitely not as crazy as it was, let's say 20 years ago when the rates were really high, and not like the rates now. They sound high, but they're nowhere near that. I think it was like 17% or something.
Yeah. So that's the trick, right? Is it's just a relation of the perspective of what it has been for so long versus what it had been a long time ago.
My first home mortgage went up to 16%. I'm an old guy. That was a long time ago, but that was, nowadays that'd be impossible. Back then, I bought a house for 34,000, so it was okay.
Right, exactly. That sounds crazy, but yeah, the houses were
Yeah,
a lot less for sure then.
yeah. Now
It's
that
crazy.
one, yeah, now that one is worth like over 600,000. It's amazing. Wish I'd have
Yes,
kept it. Buy real estate and wait. Don't wait to buy real estate.
exactly. It's amazing to see houses, especially in Los Angeles. They went from that amount to like over $1 million.
Yeah, it's crazy, isn't it?
Yeah.
If
Hey,
only-
go ahead, Natasha. Do you have something else? Sorry.
I was just gonna say, if only we knew back then. They always say, always listen to the older people because they're wise. You can learn from them and plan early.
Yeah. So now I try to let my son learn that lesson.
Yes, definitely. That's a good idea. Definitely.
Awesome. All right, Mike, I'll let you be the party guy.
All right, Trevor. David, how you
Hey,
doing?
everybody. Thanks for coming.
Thanks, Trevor. You still there, David, or did you take off? Roberto, I'll see you in Miami. Natasha, you're not going to Miami, are you? Next.
No, I won't be in Miami. I wish. My goddaughter is having her engagement / bridal shower in New Orleans. So I'll be in New Orleans. Yes.
Sounds crazy.
I know, right? It's exciting at the same time. And then in May, I have to go to Trinidad for the wedding.
Oh, sorry for you. That sounds terrible.
I know, right?
Well, good. Well, congratulations. That sounds fun.
Thank you.
Well, thank you for being here. And if you need anything from us, connect. Let us know. You got our info. So
Thanks a lot. I appreciate it. And I appreciate how you all, educate everyone and we get a chance to ask questions and deep dive and learn at the same time. It also makes better investors.
Yeah, definitely. Definitely. So hopefully
All
for
right.
all of us. All right. Good night.
All right, Michael. Hey,
Cheers,
very
everybody.
nice, very nice presentation. A lot to learn from. Exciting for everybody, I'm sure.
Yeah, it's one of those, it's not a real exciting topic, but it's really the most important topic and that people miss. So it is critical.
Yeah.
So, thanks a lot. We'll see you
All right.
soon. All right.
Good night. Good night,
Good
everybody.
night, everyone. Good night, Brooke. Thank you.